calls, Kevin, that, oh, this is the start of a big correction and we're going down at least 10%, if not further. What happened to that?
Yeah, I mean, I think the fundamental story still remains intact. If you look at the labor market, the resiliency of the U.S. Labor market, the resiliency of the U.S. consumer, I mean, it's hard to call for a big turnaround when anyone that wants a job can find it. I mean, you and I were having a conversation in the spring, and you were talking about the consumer and the strength and the expectations of spending throughout the summer. I mean, you nailed it. It was spot on. Same thing's happening with back to school, and I have to imagine that the holiday spending season's going to be just as resilient. So it's hard to call for an economic turnaround when you've got this kind of labor market.
I don't know. Like last week is a really, really good example of how narratives around this market change. NVIDIA knocks the cover off the ball. Stock doesn't really do anything in the aftermath. And then the bears say, you see, I told you the market's tired. This is the sign. If the market doesn't respond to great earnings from NVIDIA, that's a problem. Then it was Powell a few days later. You see, I told he was more hawkish. More hawkish than we thought. Yields go up. Market's got a big problem. Well, here we are today, and neither one of those things have really come to fruition.
Yeah, I can't comment on NVIDIA. I wish we owned it. I mean, what a story, huh? But the comments from Jackson Hole, Chairman Powell specifically, I don't think they were that hawkish. I don't think there was really any surprise there. The problem is, if you're talking about the bear narrative, when are they going to stop raising rates? Are they going to continue to raise rates in face of this inflationary problem and this labor problem? And they might. I mean, they might have another 25 basis point rate hike in the fall, Scott, but that's not the problem. The problem is that anything that they're doing is pushing back rate cuts, which is where we can really build a thesis for another strong bull market to begin. And on Thursday of last week, the derivatives market priced in the first rate cut for May. Now, after the Jackson Hole speech, that's got pushed back to the end of the summer, probably around this time. So we're talking about a year out before we can have the conversation about rate cuts. Well, we'll probably have the conversation every day between now and then. But the expectation for rate cuts happening next year, it just makes this higher for longer narrative put in place. And that causes the challenge, because you could have economic contraction. You could have a recession. You could have a hard landing. I mean, all of those things become a greater probability the longer you keep rates higher. But the bear case, I don't think, has a whole lot of legs to stand on when you look at how resilient this consumer is and when you look at how resilient the labor market is.
Yeah, we're going to keep our eye on that S&P 500, too, over this last 30-minute stretch. See if we can get that 4,500 back, too. We'll be interested to see as the market ramps up a little bit, almost 270 on the Dow. So what do we do? What are you doing then, Kevin, in the market?
Yeah, I mean, it's been the doldrums of August. So we've been just doing some finesse trading. You and I talked about adding to the Apple position, which we were able to do after a 10% sell-off. The past few sessions, the only thing we've been able to really pull the trigger on have been some covered call writing. Because even though the vol, the VIX, has practically no pulse, in certain segments of the market with certain stocks, there's enough news around them that you can get some premium. Apple, because it's a tech stock. UPS because of the Teamster contract and that kind of settling in, and Merck because of the 10 stocks that were, the 10 drugs that we saw today with respect to the Medicare negotiation. So we had some volatility around those. We didn't sell out of any of the positions, but we wrote calls out of the money very short term over the next couple of weeks, and we're bringing in option premiums that are annualizing out at like 9 to 10%. So even if we're seeing a stock market that's not moving, we're owning stocks that aren't moving. And heck, most of the value names that I own haven't seemed to move in a year and a half. We're generating premium. We're collecting dividends. We're trying to fight for every penny, even in a market where you're not seeing a whole lot of movement. And granted, there's a lot of people on vacation and it is still August. But, back to business. We've got a lot of data this week. September starts on Monday. Time to get back to work, right?
Let's talk about Apple, a stock that is moving up about 2.5% today, almost 185. And you used the opportunity of the recent pullback this month, if I recall correctly, to add a little bit to your position, if not buy it back. What are we thinking about it here? We got the announcement today of the new iPhone event in a couple of weeks. What's your thought?
I think the stock's fairly valued here at 185. So we did go and we wrote a covered call for 185. So there's a possibility we'll have to take some action there. I don't think I would let the position get called away. We had been selling it all year into that strength. We did buy it back about a week and a half ago. I was on the show with you when we were talking about it, which worked out well. The iPhone events are super exciting. Maybe The new iPhone 15 will have some revolutionary things, although I'm not sure I'm expecting quite that much out of this phone. But at these levels, you start to get a little bit concerned about the multiples. You've done a great job all week talking about multiples and how, as the earnings have appreciated, these tech stocks don't look as overpriced as they have maybe even as recently as 2 months ago. But I still think over 30 on that PE with Apple makes me a little bit uncomfortable. So if we see a stock that rallies and runs into that September 12th event, we'll have to make a decision, either to roll that call up or let the position go. But it's a good problem to have. I like it when a stock we own is moving in the green.